Everyone, welcome to our 10th meetup. My name is Mike, and I am part of usfasttrack.ca. Today we're going to be talking about introduction to the United States real estate sector. For all those who came out yesterday, we had a great turnout. We appreciate the support. A lot of new faces. That was the key thing for this meetup, just to get some more new faces out to them, and hopefully you guys continue to come back. But we definitely appreciate all those who showed up, even our regulars. It was great, good conversation. And sorry for the technical difficulties we had with the TVs, but that's why we're redoing this, and should be good. Alright, enjoy. Okay, a little bit about myself. I'm just a Canadian like yourself who's taking advantage of a good thing. I would even call it a great thing. My background, I've had about 8 years plus experience in real estate on the investing side. By trade, I'm actually a pipe fitter, steam fitter, which I've worked 4 or 5 years out west in Alberta in the oil sands, Fort McMurray, those people, if anyone's familiar. But just in the last almost 3 years now, I've been investing in the U.S. and have purchased over 15 deals in under 24 months. So I've been doing pretty well for my standards. So what we hope to accomplish here today is just to get an introduction to U.S. real estate. A lot of us obviously have seen the news and understand why the U.S. is was such a depressed market. As you see right now, it's on the upswing. So it's never a better time to get in now than ever. Obviously, like I said, I've been buying for the last 2-3 years, and the inventory levels are not what they used to be. So, did you miss the bottom of the market? You definitely, from what I could see for myself and other investors I talked to, but that does not mean there's not still money to be made. People in Toronto stopped buying 5 years ago and missed out on a couple $100,000 worth of equity still. So I always tell people, as a general rule, we're probably still good to go for another 5 to 10 years. It just gets more, as the areas come up, it's more strategic what you have to do, where to look. But right now, you're pretty good anywhere you buy. So our first slide here is why the U.S. and not Canada. Well, basically the buy-rent ratio is around 1. Now, for those who don't know, buy-rent ratio is basically the cost to buy and versus rent. So when its ratio is 1 to 1, that means it's just as much as expensive to rent than it is to buy. Obviously, in a lot of markets, I buy in Atlanta, Georgia, and it's much cheaper to buy than to rent. So that's why, whereas in Canada, like Toronto, it's like 3 times as much to buy than it is to rent. So it's actually pretty smart sometimes to rent versus buy. Obviously, the high cash flow with that whole rent ratio goes hand in hand. For instance, I was talking yesterday, I bought some property as low as $25,000, put $3,000 into it, and it's been rented for almost 3 years at $836 a month, and my net on that really is around $700 because I don't pay someone to manage it for me. Capital gains and taxes, there's tax advantages when it comes down to U.S. real estate. As a Canadian, you're always going to have to pay taxes on the Canadian side, so we can't get around that, but there is some perks on the tax side. Obviously, the high foreclosure sales and depressed property all around. We're seeing a lot more short sales versus foreclosure these days, just because the inventory has soaked up and now they're going on delinquent loans. Another great thing that I love in the U.S. is everything's public record, so it's very transparent. So it's very easy to find out what someone paid for a house, the loan that's on there, and comps. There are a lot of websites that people use, and it's just very easy for someone to set up a shop and get all the information you need by yourself once you get to know where to look. And all around, just it's undervalued assets. So anytime you could buy, a property under 80,000, to me in some of these markets, it's a great buy because the cost of to put these structures up is much higher than that. So it's a great thing. Why is U.S. better than Canada? Right now, in my opinion, the next 10 years in Canadian real estate will not yield what it has in the last 15 years. And most people say, well, it's a no-brainer. Well, and that's definitely right, and there's many reasons why, that makes sense. For anyone who's been in Canadian real estate, I think even if you bought in the last 2 years, I had good friends that bought out in Milton, recently just sold, within 2 years pretty much banked $100,000. And to me, everyone knows real estate's location, location, location. But when we talk generalities, to me, we as Canadians have done really well. Our markets throughout Canada have appreciated at tremendous rates, which is great. But for the next 10 years, I highly doubt they will continue to do that. So, a lot of experts are worried about the same situation that we just discussed due to the high-priced homes. In Toronto, it's, 300,000 doesn't get you much. The overbuilding with condos and apartments, we're already seeing that the inventory is not moving. Sales are decreasing. And they say there might be a 20% drop over the next year or so. Another big issue is rising consumer debt. Canadians in general have continued to grow our debt, and this is not good for overall. This is usually what happens. This is exactly what happened with the American economy, but different situation all around with the financial sector on our side of the border. Lower global energy prices. Canadians are really affected by that because Alberta is a lot of oil that we export, and it really reflects our economy. And I think one of the biggest things is increasing interest rates. It's already, Bank of Canada has already said that interest rates will be going up, and they said even maybe before the U.S., which I really highly doubt that we copycat them. But once they do, it's going to be very hard for a lot of Canadians to afford to purchase. Which as soon as that happens, I see the market really is going to be affected. So when that happens, who knows? But with the interest rates where they're at, there's only one way they can go, and it's not going down. So it's something to keep in mind. These are all reasons that I think every Canadian should be putting money in the U.S. right now, not liquidating their whole assets in Canada, but growing your portfolio here. It's just it's something that you should be doing. Which brings us to the next point. Why is now the time to buy? Everybody is coming back in the market. So this is when prices will start going up faster than ever before. Inventory levels are at an all-time low from the last 2-3 years. Which means, if you see a deal you like, move on it. If it hasn't gone to highest and best, it may go. The market's no longer a buyer's market. It's more of a seller's market. So these are all factors that shouldn't scare you away from buying because, like I said, there's a lot of room for these properties to move up in price, and it's a matter of getting into them, getting them rent ready, renting them out, and reap the benefits in the future. Also, another thing, Canadian dollar is at par. It's been at par for a while, but they're projecting it to drop. I think it was TD that said they were the lowest that they said it may. They're anticipating it to drop to 90 cents. I think that's kind of aggressive, and that's within a year. But that's good news for if you have U.S. real estate. If you buy and you're collecting U.S. income, that just means you're going to make an extra 5, 6, 7, 8 points on your money. So it's a good thing to get into U.S. real estate because you'll make some more money on that end. Also, we're seeing extremely low interest rates. A lot of Canadians use leverage with other properties they own, and also lines of credit to purchase U.S. real estate. Those lines of credit are extremely low. Like I said, interest rates are going to be going up. Might as well get into them. Use that lines and those mortgages. Right now, lock them in and purchase undervalued assets and grow that portfolio. Obviously, there's still high cash flow to be made. I always reference a lot of Canadians. We try to make $100 in the Canadian market. I don't think sometimes we even hit that. But in the U.S., if you're looking for $100, it's very doable. And like I said, I do $500-$600 on single family sometimes, even more depending on when I bought it. So I always say right now, a quarter of your portfolio should be definitely in U.S. real estate. It's a no-brainer, in my opinion. So don't hesitate and get in there. So real estate is back. It's a brighter future for real estate in 2013. That is what's trending. That has been trending. All signs have been going and pointing to this. We'll discuss a little bit more what the top professionals' confidence levels are in key market data. So real estate values, 84% of the 330,000 members think real estate values will increase. I think that's a no-brainer. 133% increase is confident over is obviously the increase is going to be better than 2012. You already seen in 2012 some markets like Phoenix that pretty much rebounded and came back from what they were. And that reason's really because, as Canadians, or as we'll say Ontario people, we buy in about 5, 6, 7 markets, throughout Florida mainly. And as, on the west side, Vancouver and Alberta, their Florida markets are Phoenix and Nevada. Mainly Phoenix, though. So, and they have money, Like I said, I was out in Alberta for 5 years, and you wouldn't believe the type of money people make out there. If you're making only $100,000, you're only working a couple months, so it's very lucrative. But these guys, they buy in those markets, which obviously, a lot of foreign buyers, Canadians are the bulk of it. We make up a big chunk of the sales, so inventory will drop pretty fast. So for real estate transaction, 84% think real estate transactions will increase. 17 believe transaction will increase dramatically. So that's pretty much 100% feel that the transactions will go up. New construction starts. 77 believe new construction starts will rise in 2013. I can tell you firsthand, I'm in Atlanta quite a bit, about every month. And just from driving around, the amount of new construction going up. Also, trying to get a hold of contractors or even the contractors I work with. It's become incredibly hard due to the fact that they're picking up, bigger jobs, brand new construction's back. My cabinet makers are, for the first time in 4 years, are installing cabinets around new complexes. So that just shows you that, that statistics is dead on. And an 83% increase is confident over 2012. I think that's a no-brainer. Permits have started up. And vice versa in Canadian market, it's kind of dropping off with new construction. And the local economy, 74% are confident the local economy will improve for 2013. We're already seeing the unemployment rate dropping, jobs are increasing. As soon as new construction starts, jobs will increase because it's a big sector in the local economies. And 40% increase is confident over 2012. Now we're going to discuss the top markets for appreciation for 2013. This is what's kind of showing stuff statistically. We won't go into the details of why. This is just a list to reference, because we're going to cover some of these markets in the upcoming meetings. So this just gives you an idea if you're thinking about buying somewhere else that you haven't already made up your mind. Some of these areas might pique your interest for whatever reason. Number 1, San Diego. Number 2, Austin, San Francisco, Fort Myers in Naples area, Houston, Honolulu, Los Angeles, Phoenix is up there, West Palm Beach, and Portland. Now what's trending is, as you can see, there's not a lot of East Coast markets on there. And what's trending is it's due to high taxes, high cost of living, and slower economy. Is making the East Coast a lot harder for to rebound. So that's what's kind of trending. Also, California is set to experience a dramatic appreciation in real estate values. As you can see, a lot of those markets are, besides West Palm Beach and Fort Myers. To me, Fort Myers is up there with Naples, because that market is always usually the last market to increase in Florida, mainly because it's on the West Coast, and everybody who's buying in Florida is usually on the East Coast. I myself looked into that market first. I liked it, but also it's a market that it's very quiet when it's not in the summertime. It's kind of a retirement area, so, and a lot of Canadians go down there, but only in the winters. So in the summertime, it kind of really quiet. It gets very quiet, we'll say. But keep track of these areas if you're interested in looking what's so good about these areas. Just Google them and all the top jobs and all that, and what attracts people to these areas. Here I just have I pulled up the San Diego, California metropolitan area house prices. So this just shows you from 87 to 2012 of what's happening here. So red being inflation house prices and blue being the nominal house prices, because they need to take into account that over the years places have grown in size and they adjust for inflation. So the red is, we'll just look at the red here, but obviously in 2006 it peaked and dropped off dramatically, right down to under 400,000. So San Diego, if you're looking at price points, definitely going to be up there, and that might limit your ability to buy in certain markets. So as you can see, it dropped off, but it will continue to grow because it's a strong market. Next, I pulled up San Francisco, so another California market. As you can see, it's the same type of trend. 2006 dropped, spiked, and then dropped dramatically, and it's on its way, back up, trending up. And I pulled up Phoenix because there was another one on there, and this is a pretty big market. A lot of Canadians, even Ontario people, buy in this market. Same type of thing, dropped or spiked and dropped off dramatically. But look at the price difference. Price difference are, very affordable compared to San Diego. So this market, great market to be buying in and to hold. Plus, it's always an easy sell when it comes down to when you have to unload. Next, we'll look at the long-term markets for 2013. We got Austin on there. Fort Myers made that list. Kansas City, Salt Lake City, Houston, Portland's on there. Dallas-Fort Worth area, Nashville, Detroit, and San Antonio. Now, what's trending here is Texas, because of low taxes and cost of living makes long-term prospects really nice. So you have a lot of Texas state or cities in there. So for anyone, to me, they also are tied into the gas and oil sector. You can never really go wrong there. I've seen it firsthand what it does to a local economy area. For McMurray, I'll tell you, it's like I said, everyone. Some people make $250,000, and they're just tradespeople. So that just shows you the type of the demand for oil and the price to pay that they'll pay for labor. Like I said, Detroit's in there. To me, Detroit, the reason why it makes for a long-term market is because, the prices that they dropped so dramatically that, when you can buy property for $15,000, and I know investors that have $20,000 into a property and they make, $700 rent every month. It's kind of a really lucrative way to have some high cash flow. It also comes with a little more issues in a sense. Some of the areas you gotta be careful because Detroit's it's not an easy market to be in. But if you can manage it, it's a very lucrative market for sure. Now, things to think about when you're getting into U.S. real estate are basically. Definitely financing is going to be a lot harder than what you're used to. Like I said, majority of people use their leverage up here, lines of credit, other properties, and kind of use that money. The good thing is when you line up the money up here, it's kind of a cash deal. The banks up here will loan to Canadians. Most banks up here have affiliates, like TDs in the U.S., RBCs in the U.S., they've been bought out by PNC, but they're still there. You have BMO's bank or Harris Bank, so they all have affiliates. They usually offer one. It's if you're buying a vacation home, very easy. Rentals gets more more strict, but and down payments can range from 30% to 50%. There are some private companies out there too that will lend. It's just something you need to kind of look into it. Obviously, cross-border taxes, you definitely want to line up before kind of buying. Don't overlook that. Double taxation, everyone always asks me about that. There is if you do it wrong, but you should be able to, you have to pay taxes in Canada, but you'll get credit for the stuff in the U.S., if you set it up right. So I always recommend talk to a specialist, and you should be okay there. Obviously if you're buying from a distance, management, who's going to be managing the property, also who's going to be for maintenance, who's doing that, how are you repairing or even getting it rent ready, where you're going to find your deals, who you're going to work with your power team. Liability issues. 95% of lawsuits come out of the U.S. in the world, so liability is a huge concern. Usually comes into with the tax part. So it's something to, like I said, when you talk to a cross-border specialist, there's 1,000 ways to do certain things. And if you talk to 1,000 accountants / lawyers, they'll probably give you 1,000 different ways. So it's just something that you need to do. Obviously, turnkey. Are you going to be buying a turnkey property, or are you going to kind of do it yourself? That's something to consider. Turnkey, you'll be paying retail, but if you do your due diligence on the company, you should be able to get a good product. But be very careful. I have a lot of people that call me and they say they get burned by these guys. I used to sell turnkey stuff. I still do because I flip, but sometimes my flips are not ideally for best rentals just because it's in more of a homeowner area, and you're paying a higher price and you may not work on your numbers, but I buy in great areas, so it's if you're looking for safe investments and less risk, and easy rentability, I got some areas you can look in. And what's your exit strategy? You know, are you buying for vacation purposes? Are you buying for to buy and hold and to grow a portfolio? Are you trying to sell it right away, flip it if you want to call it? These are all things you need to keep in mind when you're buying real estate. All these things, it's a pretty big topic, so it's like we could talk here forever about each one of those. We usually have different meetings regarding each one of those that you can come out to and get more information. But like I said, it's just an introduction today. But those are things you definitely want to keep in mind. Now, like I said, for those who are on with my company's US Fast Track. Now, if anyone's interested in working with me directly, there's different ways you can work with me and Matt. Basically, you become a partner. We always look for either equity partners, which is ownership of stuff that we do, or money partners. We give an 8% interest, and that's on a first position mortgage. It's a really safe and conservative way. When you're an equity partner, it's more risk, but usually more reward with that. But it's a great way to get familiar. I always tell people how I got started. I partnered with other investors, learned how to do it, and then eventually you move on. If that's what you're planning to do. If not, you just continue to grow with that with that partner. So, like myself, I always tell people that you may only have enough money to do one deal, but that shouldn't limit you to do more. And what we usually do is for anyone that's working with us, we'll tap into their database and get them to raise funds and for us to grow with them. So that's something we can discuss if you're interested. We're also launching our first education program. This is where you can learn how to do everything we just discussed, and grow a portfolio from even if it's just one property to like 15 or 20 or 100. This education program is going to be allow you to do that. Now, I've never really been fond of the education part because what's out there, I find it's very what's the word? At the end of the day, it's pretty crazy, some of the stuff out there and the cost. So I've never been the one to really do that. The reason why we're launching this is, for the last 2-3 years, we've had probably 80% of our phone calls are just people trying to pick my brain, which is great, and we spend the time with them. But there's just sometimes it's easier for me to say, hey, just here's all the information, and you can work it on your own time and do that. So it's just a way to free up my time, and my time's better spent working on deals. So that's going to be coming out. We got a webinar coming out next week. Make sure you tune into that. It's going to be great. Like I said, a great way to get educated, and it will save you a lot of money down the line. Also, you can get paid for referrals. Basically, refer a friend and get paid. We'll discuss a little bit more details with that, but here's just an example of something that I've done. Purchase price was $50,000. We put under 10 grand into it. It was going to rent for $900 to $1,000, so we're trying to hit a 13% yield. And it was last year, so far to date, we've owned it for about 14 months. It's rented at $925, so we're right in the margin there. We're hitting almost 15% yield, and the current value is about $105. So this is kind of the benefits of working with us. If you were, a partner on this, we return all the capital to the partners first, and it's just a 50-50 joint venture after profit sharing model. But what you see is, because when we put that money into this property right off the bat of, we were about $60,000 into it, it was worth minimum $85,000. And within a year, it's come up another 20 grand. Actually, there was a recent sale in the neighborhood of close to 120. So the current value is even higher if you want to say that, but I'm very conservative when I talk about this stuff. And just going back to the referral program, so if you know anyone interested in lending or partnering with us, you'll receive about $1,500 every time they close a deal with us, and that could go up depending on the actual deal. But we would discuss that prior. So it's a great way just to make extra income just referring us. But like I said, if you're looking to do stuff, you can even come on the deals and bring some investors or your friends on board, and we can discuss all that. We kind of cater to everybody as long as it doesn't go out of our investing strategies and whatnot. So keep us in mind. So just a little bit more on the education part. It's coming out in June. Like I said, we have a webinar coming up, but you're basically going to learn how to buy as a Canadian. Basically where to buy, how to manage from a distance, how to evaluate. You're going to learn all about your financing options. You're going to get some tax education. What I like to do with tax information is get people to understand the lingo and the different structures out there. So when you talk to your accountant who specializes in the cross-border, that you understand what's going on in the conversation. I remember the first time I sat down with one and they're talking about these different forms, and I kind of got lost in the conversation in the beginning, and I missed probably the most important part of that little meeting. So that's what I kind of like to kind of just get everyone on the same page there. Obviously, we're going to be talking about liability, how to hire contractors, how to watch your contractors, how to pay your contractors, how to create, basically the best power team out there, and how to build a portfolio in 5 years or less. So, like I said, whether you're looking for a vacation home or you're looking for 10, 20 properties, you'll see some benefit in this program. And there's much more information just on saving, tips and all that, which will go a long way down the road. So keep in mind also when that webinar comes up, and we're trying to organize a Atlanta bus tour. I keep telling people I'm going to give them more information. Like I said, a lot of great information. Basically, it's going to be a visit to a foreign city, obviously Atlanta, Georgia. It's going to be a 3-day trip. The price will depend on the attendance. Like I said, I'm going to need at least probably 6 people to make it worthwhile for everyone to come down and try to save money on the numbers. The date we're looking for September, most likely. This is where you get to meet the professionals in the area, so property managers, agents, closing attorneys, other local investors. It's just a great way to get to know a foreign area. I always tell everyone, no matter what you think, or these programs out there say you can buy property from your house, I can manage to do that now because I'm set up to do it, but I don't even do it. I go down all the time to look at these properties. It's a cost of business. I don't mind. I don't pass that fees on to my investors. It's something I just swallow because I like to know exactly what's going on with my properties at all times. So I always tell people, get to know the city wherever you're buying before buying, because it will save you money. You'll get a real, pictures only tell you so much. But when you go drive through these areas, you really get a good understanding of what's going on. And that's pretty much sums up our little meetup here. Thanks for coming out, everyone. Like I said, I apologize for the inconvenience with the big TVs there. They had some issues there, but that's okay. We're investors, so we we know how to get around certain things and whatnot. But remember to review us on Meetup. It's a great way to grow our group. People see the reviews and they want to join and be part of it. Like I said, our Meetup group, we leverage individuals that are in the meeting that come out. Everyone's got different experience levels, from beginner to some really, really savvy guys that have multiple properties and sometimes in the hundreds. So like I said, they're not always there, but when they're there, pick their brain. They're great people. Our next meeting will be on June the 23rd, same location in Vaughan there. For more information, check us out on usfasttrack.ca. You can find us on Facebook, Twitter, and happy investing, guys. We hope to see you on the other side soon. And good luck, guys. Thanks.